during lunch that I had mentioned something about using a pattern on a shorter time frame to indicate when you should override what's going on the higher time frame. And a perfect example would be that ES 15-minute crown, actually. If we look at, on the S&P or on the ES daily, if we look at the chart, it's obviously an uptrend currently, right? Currently, not the earlier stuff, but it's obviously an uptrend at the moment. If we even go up to the weekly chart, at the moment, we are in an uptrend, okay? At the moment. It might change, but at the moment. But when we took it down to the intraday, that crown pattern that you may recall on the 15-minute chart, that actually occurred right here. Okay? That actually was right here. Well, it's not on this chart because that was an intraday pattern. Okay? But my point is that we were in a strong uptrend on the higher time frame, daily. I mean, basically at this point, we came down to here, we had support here, and we were saying, okay, well, the rally is resuming, so we should be looking to long side and favoring that. But when we saw the intraday crown, it told us that that correction might not be done yet. Okay, so that's what I meant in the, on the web page that you guys saw talking about the workshop, when I said, or when Linda said, that there would be situations where I would be covering the idea of looking for a shorter time frame pattern that's overriding the higher time frame. And even though it didn't necessarily reverse the higher time frame pattern, obviously, since the crown was put in right there, you wouldn't want to be long there. I mean, yet instead we had the advantage, we had the opportunity to take advantage of the additional short side that was still going to be in place there. And then we'd be looking for the rally to resume. And by the way, as you can see, that rally resumed. What do we have? Zigzag. Okay. So that's what it told us, and that was what that meant when I was talking about that there are specific things you can look for on a shorter time frame to override what the higher time frame is telling you, and essentially justify a counter to the higher time frame trend move, to take that instead. And let me just make sure I'm a little cleaned up here. And now we're going to get into triggers and trade management. Now again, excuse me, I want to really be clear on this. Obviously, we all need a trigger. We need something to go on the chart to say it's time to get into this trade. When I said yes, I heard a lot of gasps yesterday when I said the trigger isn't important. I didn't mean a triggering event isn't important. You need something to get you into the trade. What I meant was which trigger you use is not important. The main thing with a trigger is to find the thing that you can read, that speaks to you. A lot of the triggers that we're talking about are based upon the same data. All right, you compare a MACD and a CCI, the graph looks different, but they're both forms of moving averages. It's taking price, massaging it in some way, smoothing it, and giving you some sort of a decisive read to say this is going in the direction you want it to go. So it really doesn't matter whether you use a MACD or a CCI. I use CCI because I've been studying it long enough that it calls to my eye. That's the expression I use. It speaks to me. For those of us who are more verbal oriented, same idea. But if you're more comfortable with a MACD or anything else, I'm certainly not going to tell you, oh, this is better. It's not better. Better is the one that you can read. Better is the one that speaks to you. I know I belabored that point, but I really just want to make that clear. I can show you how I use CCI. The other thing, though, before I go into that, I just want to mention, you want to be careful with confirming triggers. All right, some of you might have heard this story from me before, but I see that, first of all, I see a lot of people, as I mentioned, who have a million indicators on their charts, and I don't mean like the chart you showed me. I mean you can't see price. It's just like, where's the price? I've seen choo-choo trains, and I've seen spiders, and I've seen, all kinds of things crawling all over the chart. I know this one guy, from several years ago, and this guy falls under the category of hobbyist as far as I'm concerned. He wasn't really trying to make money. He liked playing with the toys. He programmed his charts. He loved writing e-signal EFS files, and he set up his chart so that where he had a trade signal, it would print a little smiley face on the chart. I mean, really, the yellow icon with a little smiley face. So not only did he have all the indicators on the chart that generated the signal, but it was like low, with a little smiley face, and that's fine if that actually worked for him and he actually read it. I know someone else, one of the better traders in my chat room, who uses my CCI stuff, but he doesn't like having it in a subgraph. He likes having the CCI directly on top of price. Same triggers, but that works for his ability to visualize it better. That's fine. But what you want to avoid doing is goes back to what I said about understand, please, what your triggers, what your indicators are doing, what the math is behind them. You want to avoid using two indicators that are actually doing the exact same thing and believing for a second that it's confirming each other. And an example of that would be, what MACD settings are you using? What MACD? 1643. Oh, so 16 and 4. So it's 16 and 4 are the moving averages involved, right? Okay, so what if you had a MACD, and the MACD was displayed below price, and the moving averages were set for 16 and 4 period, okay? And then you also put on the price chart a 16 and 4 period moving average crossover, okay? I have had so many people bring their laptops up to me, and that's not you. I'm not saying that. I was just, I've had so many people bring their laptop. Look, I found the Grail, because both of these things are triggering, and they just don't understand that it's actually the exact same thing represented in two different ways. So you don't want to do that. CCI. I think that's my next slide. Yes. CCI stands for Commodity Channel Index. That does not mean that it's only for commodities. It was invented by a guy, Donald Lambert, who I met actually in California. And he was focusing on commodities and then stocks with it, so he just named it that. The Commodity Channel Index, and here's some math stuff for you guys, is a detrended moving average oscillator. What the heck does that mean? Well, all I'm saying here is that I use a 50 period primarily, 50 period CCI. What happens when the 50 period CCI crosses the zero line is flat. Bless you. The CCI is flat. The CCI zero line is flat, and the line crosses above and below it. The line represents price. The flat zero line is the moving average. So the indicator is detrended. It's taken outside of the context of whether the market's going up or down. That allows me to see extremes and reversion to the mean a little bit more easily for my eye than watching how price reacts to a moving average. It is very, very similar. I'm moving away from what it says here, but just so you know, it's very similar to using a Bollinger Band. CCI is extremely similar to using a Bollinger Band. If you were to take a 50-period simple moving average, standard Bollinger Band, 50 period though, and instead of using the standardized 2 standard deviations on the, or whatever, however it's at 1.5 depending on your package, set it to 1, you would have, the bands would be my 100 lines. And that will work just as well. I just happen to be able to see these triggers better on this, and that's why I'm saying use what you want to use. Okay, so that's what I'm saying here. By being detrended, it allows us, what I mean is me, allows me to see how price is reacting to extremes and neutral points within the context of a trend. When you have price bouncing off a moving average on the chart, it looks like the uptrend. To me, it looks like the uptrend is going to keep going forever and ever. But by flattening it out, it's easier for me to see how it's reacting at that neutral point, the moving average. That's just how it works for me. It does not lead price. It is a lagging indicator, as are all indicators which are dependent on current price action for their calculations. Does anyone know why I'm specifying it does not lead price? Any guesses? Yeah, there's that. But
indicator that's based on something that's already happened.
Yeah. There's also, CCI has a bit of a bad name among many people who've been through using it, because they studied with someone who advocated a very fast CCI. and they lost money. I mean, I studied this myself, and it worked in very choppy markets. You could just basically use it like a stochastic, but sell the high, buy the low, and so on. Other times when it was trending, it just didn't work that well. But the problem was that he tried to present it as some kind of magic ball, and some kind of a crystal ball. He said it's somehow leading price, and that's impossible. It's a series of moving averages. But our Fibonacci work actually is a leading indicator. It's not a leading indicator that tells us where price is going to go, but it tells us where we have to focus if price does reach that point. It tells us where we're looking for reactions. Okay, so I call that a leading indicator. If someone else has better wording for that, if that sounds misleading, I think you know what I mean. Yes, it's basically at this point. This lets us know if our support and resistance is likely to be respected. All we're looking for in an indicator or an entry method is, all I'm looking for is, I have a bunch of those lines there. And they're so tight together that I can't read the numbers without the tools Carlos gave us to allow us to read them. I have that bunch of numbers there. I want something to tell me if the market is putting on the brakes as it's approaching that area and is likely to reverse. Okay, so for me at CCI, the settings used, 50 period, 14, and 6. Now on a daily chart or higher, instead of 14 we use a 20. That's simply because very often on a daily chart you'll have one of those elastic candles, we call them, something that really spreads out there, and the 20 tends to smooth it out a little bit better. The 14 can get erratic. So daily, weekly chart, it's better to go for a 20 in my experience, and I do constantly compare to make sure it's still that way. CCI should be set to median in Fibonacci Trader. Basically that means average. All it is high plus low plus close divided by 3. Okay, and that's basically it. If you want to know exactly how to do the math on the CCI, all you have to do is Google what's the math on the CCI. All right, and you'll get the formula. It's not hidden, it's not proprietary, and it basically is a Bollinger Band formula tweaked a little bit. Okay? Now, I will show you, so I can understand why my mouse isn't working. There are 4 primary triggers that I use. 4 triggers. I say primary because some of the other behaviors in the CCI might give us a heads up. All right, but really there are 4 triggers, and you got to get these understood first before we talk about nuances. What's this? A 60-minute pound, okay? 50.34 long. Price crosses above the 34 EMA. More importantly than price crossing above the 34 EMA is that we're coming off a major support zone. All right? You look for triggers when you're getting a reaction from something fib-wise. You look for triggers as you're approaching that area too. You want to know if that area is being respected. Price crosses above the 34 EMA. 50 CCI crosses above 0 with the other CCIs either already above or leading. In other words, the 50 crossed above 0, the 14 and 6 were already above 0. Okay? 50.34 represents a change in trend on that time frame. This actually was kind of trendless, but it was starting to form a pattern of lower lows and lower highs. And it got arrested at our 786 support here with other support underneath, and it changed trend back to long side. 50.34 long. Okay, so the trigger was actually here. There's the 50 crossing above 0.
Can you expect the little part of the chart so we can see?
No, this is a still chart. Okay, but I mean, what I was going to do is go to a live chart and show you. Let's find another one on a chart that I can expand it. What's this? This is a daily. Yeah, okay, we might as well use this. Here's a daily chart. Come on. I don't know what's going on with this thing. There we go. It's because of that data issue earlier. Here's a 50.34 on it. Stop it. Okay, here. See that?
Which one is the 50? Which is the purple?
50 is the dark red on mine. Okay, 14 is the blue, and the least important is the 6, which is that light yellow line. Okay? That example, though, of the last chart, that's in your workbook. So you should be able to see that up close. The one that we had up just before this, that's actually in the workbook. Can you see it on there?
Yes.
Which is where?
Page after the CCI.
Okay, well the one, if you think about it, it's 50, 14, and 6. So the one that's smoothest would be the 50. It's like a moving average. The one that's smoothest is the 50. The one that's a little more jaggedy is the 14. And the one that's the most jaggedy is the 6.
This may be baby stuff, but when I look at I just look at Fibonacci Trader, the platform and how it works. And if I'm cutting you mentioned you had a student who sometimes cuts at the low or cuts out the price chart itself.
Right.
So the Fibonacci Trader allows you to determine what chart, whether it's a subject.
Right.
That's one point. Now, when I use my regular platform, I just put in like a 20 or a 40 one. I don't say using 3 numbers. Do you going to 3 times to get the 3 over that? So
Yes.
can you show?
Sure.
Just take off the CCI and put it on.
No. I'll show you no, I have an easier way to do that. You need to see it. Yeah. I'll just show you how the settings are.
Okay.
There's several. I mean, you can set it up any of a number of ways, depending on how you'd like it. But the way it is, here we are. Again, this is 50, 14, and 6. And in Fibonacci Trader, in indicators, you can see I have 3 CCIs, Commodity Channel Index, all set to subchart 4, meaning they're going to be together in one place. And each one, I'll show you how they're set. This is the 6 period. Okay, they're all set to own period, meaning in this case I want it on the 45-minute chart. Median, length 6. I don't need an offset. So you just open that. You go to, I'll take that one off and add it for you so you can see. You go and find Commodity Channel Index. Okay, and you add it. Just double click it to add it. And then you're going to go in, you're going to double click the one you just added, change the color to whatever you'd like it to be. Okay, set the length, in this case I wanted 50. I'm sorry, I wanted 6. And make sure this is set to median. Median meaning like average. Okay, in other packages it might say, that's the standard setting for CCI, is median or average. Oh, thank you. I can't see my screen when I'm standing over it this way. Thank you. I would have been pretty confused.
And the offset always remains at 0.
Yes. Yeah. Offset simply means it would move it to one direction or the other. For people who people who like to read it a little sooner on the chart than it actually moves it over. Yeah. And that's all there is to it. So you set one for 50. The reason I didn't want to add each one is I've already changed. I set it on the wrong subchart.
So if you repeat it, you close it and you go back and click on CCI again and you add 50,
Right.
medium, 50, 0.
No.
And then you go on the 34.
Right. The next one you do a 14, and the next one you do a 6. Okay.
Notice the 34 one you had a different combo though. You had 6, 14, 50, but the 34 had something else. I didn't understand.
The 34 is the exponential moving average.
It's down there too?
No, that's on price.
Oh, okay.
Okay? So, but I just messed this up. You see what I did is I let it go.
Sorry.
No, it's not your fault. I want to point out some people like it this way. I have charts where the CCIs are each on individual subcharts. Some people can read it more easily that way. So what I did by not altering this and saying to add it to this subchart, it opened in a different subchart. So you can do that with the program if you'd like. I like them together personally. No, the reason I didn't want to take them off and put them on is because I've changed the default settings on mine, so it wouldn't be realistic. It wouldn't show you exactly how yours would look. Let me just change this back. Yeah, you see the new one I added is in subchart 6, so I want to put this back in subchart 4. And you can go through these things and find that there are all kinds of cosmetic changes you can make. You can make the line thicker, you can make it thinner, you can make it a dash. You can play around with those settings. And I still forgot to change the subchart.
Change the length to 4.
No, I don't need to change the length. I changed the length to 4. Yes, I did. Yes, I did. Again, I'm getting off track here a little bit. Thank you. All right, so now I just have to smush it down a little bit. Okay, so that's the deal. Let's get back to what the actual triggers are. So this is just the 50-34 long. Again, this is in your book. You can see up at the little circle to show where the trigger occurred. All right, so again, the other CCIs are already above 0. Price crosses the 34 moving average. 50 CCI crosses above 0. It doesn't matter, common question, how many bars apart should the cross of the 34 and the 50 be? Doesn't matter. If the market happens to flatten out a little bit, you might get the cross above the 34. If it's hugging the top of the 34, it's a good sign because it's holding support at the 34 EMA. Then when the 50 crosses above 0, you have the trigger, okay? What you don't want to see would be the 50 crossing above 0 and the 14 still below 0.
Almost all the above.
Yes, either at the same time or you want the others, the shorter ones, to be leading. Yes?
How often does that happen when everything's BMA prices flat? I've taken off I only use the 50.
Okay.
Because it doesn't seem to matter.
Okay, yeah.
And I'm just curious, how often does it happen that the 6 and 14 disqualify the trade?
The 6 rarely. The 14 might. That's something we called, we named that, when we were working on these triggers years ago, we named that the 5034F for false. You've heard me say that in the room. And what can happen is the 50 doesn't cross, and the 14 basically pulls the 50 back below 0. What you have then is what amounts to is a 5034Z short. You know, so it's just a heads up. If the 14 is not above 0 at that point, you just want to make sure that everything is crossing at the same time. Okay.
So this example or principle here, first thing on the price chart is that there's a crossover on your 34 EMA. I could be using something else.
Right.
So now you look at the indicator to see, is it confirming that move? And the main indicator is the 50 CCI.
Yes.
And again, the only scoring is checking the 14 or 16 has failed to cross over.
Yes.
Okay.
Okay. But you said one thing. One sec, please. You said one thing. You said you might use a different EMA. Okay. That's fine, but it's still that's not my trigger. Okay. In other words, if you're not using the 34, it's not a 5034.
Oh, you're talking the 34.
That's why it's called a 5034.
Oh.
Okay. As the 34 has been optimized to work together.
Okay, what do you mean back?
Yes, 34 exponential moving average. Okay? So if you find it better for you, again, this is triggering issues, if you prefer to use a different...
You have done the spreadsheets.
Well, that's what works out for me, anyway. But yeah, that's why it's called a 5034. Okay, did you...
So I have the same colors as you for reference. The 50 is what color?
Well, I usually keep it kind of red, yeah. I mean, I have different charts that have slightly different colors.
50 is red.
Blue usually for the 14, and yellowish orange for the 6. Okay, yes, back there.
Are those parameters applicable to all instruments you
Yes, yeah, the only difference is that daily time frame or higher, you use a 20 instead of a 14.
And even 15 minute or 3 minute, you use a 50 CCI?
Yes, definitely, yeah. Because you're looking for the rate of change. It's basically just like a lot of people use a 50 period moving average on their chart for trend. That's all this is. A 50 CCI is a 50 period moving average flattened out.
Now, in terms of the 100 plus or 100 below, how does that work in relation?
You know what? Let's get there. Let's work step by step.
My question is about the 100.
Yeah, well, we'll build there. We'll build there. Thanks.
Mark, I'm just a little
Yes.
curious. How'd you come up with 34? Just trial and error?
Trial and error a lot, yeah. As a matter of fact, we did things with moving average bands and multiple moving averages and ribbons and so on, and said which one has proven to be most conducive as a confirming factor or leading factor with the 50 CCI setups as a filter. So
Time frames, correct?
yes, yeah. I think other moving averages are great. You know what? 50, 14, and 6 period CCIs are 50, 14, and 6 period moving averages. That's all it is, just displayed a different way. By the way, the 14, if it's on the wrong side, it just might mean that there's going to be a lot of noise before the trade takes off. It might start to Z in the other direction and then pop up, and the 14 crossing at the same time or leading is going to be your indication that it's finally ready. So it might just be a noise
And the
factor.
reverse is the same. It's a downtrend is when the 50 goes below the 0.
Next slide.
Okay.
And that's too far back. Yep, 50, 34 short. Okay, this, by the way, was that ES crown. as an example, okay? Here was the initial short trigger on a 15-minute time frame, all right? Price down below the 34 EMA, 50, 14, 6, all below 0, okay? That's all. It's just the same if you put a 50, 14, and 6 period simple moving average on your chart together with that 34, what you would see is price crossing down below all of those at the same time. It's the same thing. It just looks better to me this way. Okay? So you asked me yesterday about, can you show me a moving average crossover instead? That's what this is. It's a moving average crossover. It's all the moving averages crossing over each other and price crossing below. Do you understand what I'm saying?
So when we take that, we're doing, for example, the Braun.
Yes.
And when we take that, the B2C, and it goes to 127, when the market hits there, that's when we check the confirmation on the CCI, it's actually showing that it's going to go down.
Okay, check this out. You want to see this in, I mean, that's a separate thing a little bit too, but notice that when we came down to the 1272 on that chart, the CCI did not trigger short. See? On this time frame, the 50 was above 0. There was no short into the 1272, which is exactly what you would want, because it didn't hold, it didn't break the 1272, it held it and bounced. That's why I came up to, to using these triggers and working on them and developing them, because most of the time, the trigger is going to occur when the actual move is occurring. The trigger occurred after coming back up and holding the res and then failing. Okay? So the trigger wasn't anywhere in here. The trigger was when it actually started to move. Yes, and fell from there. See? See, the 34, I guess, it's going to look better in your book, because that 34 probably is a little faint on the screen. But you can see, originally when it came down to the 1272, it did break the 34 EMA, but the 50 held above 0. So failure to get a trigger stopped you from getting in trouble.
Okay.
Okay? So yeah, and again, 50-34, change in trend on that time frame. This was a nice uptrend in here. When it finally switched to a downtrend, that's when you see the trigger.
Looks very pretty on your chart.
Yeah, well, it works. But, okay, so let's go on. Next trigger. This one is called a 50-34Z. Okay, 50-34Z long. 50 CCI retests 0. Retests meaning it had already crossed above 0. See, the 50 is above 0? You see that, everyone? 50 is above 0. And it came down towards the 0 line. Okay, towards the 0 line. Within 50 points. Within 50 points of 0. So if this comes down and it says it's, you look at your readout and it says it's at 40, you're within range for a 50-34Z. 6 CCI crosses below 0 and then back above. Okay? The 6 CCI, basically what this is saying is that the trend, CCI, the 50, is maintaining upside momentum, but you had a shallow pullback. The 6 period, prices violated the 6 period. 6 goes down below the 0 line, and then by springing back up, some people call this a slingshot. You see how the 6 goes all the way down and comes back up? It's just like when you hold a slingshot. And it's telling you that the trend is going to resume. 50-34Z is the trend resuming after a shallow pullback. It's a retest of the point of breakout. Now, a lot of people, here's 2 of them. This one's a little bit cleaner, the second one. Best if price is also testing the 34 EMA. See that? Came down and held the 34 EMA. And 14 period or 20 on daily stays or crosses above 0 too. And it's best if, in other words, the 6 should really be the only one that is the trigger by crossing back above 0. All right, so that, a lot of people will wait for a 50-34Z. A lot of the times you'll get a 50-34 and then a pullback to test that point of breakout. And so they'll wait for that as a confirming trigger. That can be, we'll actually see examples of that on other charts, but that can be a good thing. It's a more solid, reliable trigger actually than the 50-34, but also sometimes you don't get it. You get a 50-34 and it just takes off. and then you're waiting around for a pullback and a trigger. Anyway, the trigger itself is the 5034Z. Again, price coming down, relatively close to the 0 line, 6 crossing down and back above. Okay? Is that pretty clear? It's a safe trigger. It's a really good trigger.
Is this strictly speaking a continuation pattern, or is it a change of?
No, the 5034 would be the change in trend. That's why I'm saying very often right after 5034 you get the pullback. Yes, exactly. So an example then of a short side one is here. And again, notice we're talking about working off of res. We had a reason to look for a change. Here's an example of a 5034 and then a Z. See this? Here's the Z, 5034 short. See the 50 had crossed below 0, came back up, retested the 0 line, 6 crossed above 0 and then back below. The mechanical trigger, what you're looking for, is that 6 crossing back below to rejoin the 50. On this one, you had the 5034 first. See that? 5034 short, and then basically it came back up, price came back up and retested the 34 EMA, 50 CCI came back up and retested the 0 line, and then it fell apart here. All right? So the thing is, if you were waiting for a 5034 on this chart, you have to see how often this happens. It happens sometimes. You might get in a little bit late here and then take some heat as it retraces, as it bounces. The safer thing is to wait for the Z, like I said, 5034, then look for it to retest and fail again. Safer, but sometimes you don't get it. Sometimes the 5034 just plummets. So you just have to choose. If you're more conservative, you're going to wait for the Z. Yes?
Mark, in this example here, the 6 crosses just above the 0 and then snaps back.
Right.
Is there any, let's say, correlation between the heights of that?
No. A lot of people like to see that at the 100. I haven't found. I think it was more important that it hit the 100 line when people were using Woody CCI without the 50. In other words, they were looking for the 6 and the 14 only. Okay, but the fact that the 50 is getting within 50 points of the 0 line, that's showing you it's enough of a bounce. Okay, so that's the 5034Z short. Now, how do you make up for this idea? What I was just talking about. Do you take the 5034 or wait for the Z? That's why I like to look at more than one time frame at a time, because the trades I take are showing triggers on more than one time frame at a time. When you get a Z on a 15-minute chart, you might have a 5034 on a 60-minute chart. So I wait to see that it's lining up across time frames, and if they're all 5034s, fine. If the other one is setting up for a Z, I wait until I get the Z and the other time frame 5034. That's because each one is just giving you a little bit faster or slower motion. So you'll be able to see the triggers, across the time frames. Yes.
How often do you wait for the period to close?
I try to, yeah, that's a good question. One of the things I don't like too much about talking on these still charts, this is what we're going to do tomorrow. One of the things I don't like using examples of this nice printed chart, you said your chart is very pretty, we don't get to see how vague this might be as it's printing. This is hindsight. This is a 5034Z, it looks wonderful. Intra-bar, it might look like, is it triggering, is it not triggering, is the 6 crossing back below, is it not? My answer to that is wait until at least the last third of the bar. Okay, third of the bar, so 15-minute chart, you're waiting until the last 5 minutes. What's the disadvantage there is if it really triggers and you have a fast market and it takes off in minute 3 of that bar, guess what? I missed the trade. There will be enough of them where it lines up perfectly. But if you jump in all the time as it's just forming, it's going to go against you a lot of the time. This looks wonderful now. But this might have just triggered in the last minute. Well, this was a 60-minute chart, but this might have just triggered in the last couple of minutes of that chart. It's possible. All right? So how would you feel if you're looking for this pattern and you got in and the 50 and the 14 were on the right side of 0 and the 6 is crossing below and popping above and crossing below and popping above? It drives you crazy, especially if you hit that button to get in the trade and then you watch and in hindsight there's no trigger. In other words, it actually closes without the trigger. That's a very stupid, uncomfortable feeling. So what I do is I wait until the last third. It's just a give and take kind of relationship where I figured that's enough time. Over time, that's proven that's enough. It's also offset, though, by the fact that you look for it on more than one time frame. Because you might have a closed 50-34 on one time frame, and you're just looking for that Z on the shorter time frame to confirm it. So that helps. No, I hit market. If I'm using these triggers, I'm hitting market.
Is it too conservative?
Well, you could do that. There's nothing wrong with that. Yeah, you could definitely do that. You could. There's no problem with that at all. You might want to do a stop limit, a limit order, so it's not getting you in at market in case it really takes off and you get a bad fill. You know what I'm saying? Limit how much you're going to get. You know what I'm saying? Good. Okay. Yes.
Sorry, on my CCI, I don't have the zero line. How did I set it up?
You may have, and
Say zero on the...
okay, yeah, you probably have to fix the scaling a little bit, and let me show you on that. What you need to do if you don't lock the scaling, by that I mean go to each of the CCIs, and you see again I've set this by default on mine, so I don't think to, you need to go to scale, okay? Set it for user-defined values, or use fixed values. Do you know what I did in opening that? Okay, and I use usually minimum minus 300, maximum 300. Now, if you don't do all that, it's going to look just the same, but it's not going to lock your 100 lines on the right place. As a matter of fact, I didn't set that on the 6 when I redid it just now, so I don't have a 0 line either. I have a 2 line. So I have to change that. You want to set that for use fixed values, minus 300 to 300. If it turns out the line is going all over the place on your charts, you might want to change that to minus 350.
So you got to do that for each one?
Yes, for each one. Okay. You could do it. You could set it, change the default value, but I don't want to get into that right now because it could mess up your program if you do that incorrectly. And then you go into also overbought and oversold. Make sure they're set to 100 and minus 100. Okay. On one of them, if you're going to put them all in the same subchart, set 100 and minus 100 on one of them. The other ones set to 0, because what's going to happen is if you have all 3 of them trying to paint a line at 100 and minus 100, they'll cancel each other out.
Okay, so set one.
Set one to 100 and minus 100, and set the others to 0.
Where do you do that?
On the tab that says overbought, oversold.
In those areas, put 0, 0 for all the others.
Yes.
Put something in there, 0.
Yes.
And what was it supposed to be for scale?
For scale, I found minus 300 for minimum and 300 for max. That's simply to keep everything locked together. You see, take a look at my. Take a look at this one now. I re-edited the 6, and you see what's happened? I don't have 100 lines anymore. They're actually printing at 100, but because I didn't lock the scaling, it's saying 85 and minus 80, and my 0 line is turned into a minus 2 line because the scaling hasn't been locked. The indicator will look exactly the same. The reason I didn't go into this in detail is everyone has this set up a little bit differently, so. Yeah, let me fix my scaling now because it's wrong. There we go, that should fix that. Yep, see? That's the difference. Now I have those at the 100 lines and the 0 line is in the right place. So.
Just when you do the scaling, you do scaling only for one or for all 3?
For all 3. That's why that was wrong just now, because I demonstrated adding the 6 again, and I had the scaling set correctly for the 50 and the 14, but the 6 was off, so they were all trying to print in different places. Carlos has that set so you can modify the scaling because some people want to use the same subchart for several different indicators. Okay? So if you have several different indicators and some of them read from 300 to 300 and others are reading from 1 to 10, he has it set so that you can alter it so that everything, what would happen is your 1 to 10 one would be scrunched down so small you couldn't see it, and the 300 to 300 one would be all spread out. So he has it set so that you can add indicators to the same subchart, modify how the graphics come out So an indicator that ran from 1 to 10, or stochastic, you want to see the 20 and 80, overbought and oversold, it'll come out in the right place in relation to each other. So that's why that's there, it's to make the program more versatile. All right, so that's the 5034Z. All right, I used to call this also the second chance to enter, because here, you had your 5034, and the retest is your second chance to enter, the Z. Okay? The third trigger, 5014. This one's a 5014 long. Okay? This is a deeper pullback with the trend maintaining. Here we are. This is a Euro chart. Euro USD. Bump-a-dump-a-dump. Support holding. 5014 long. 50 CCI maintains above 0. The 14, in this case, the 14 must make it down to minus 100. And then it crosses back above 0. All right? In a case like this, in this one, the placement of the 6 period doesn't matter. All right? But the point is that you're looking for the 14 to make it down below 0, all the way to minus 100, and then to pop back up above 0. Now, what's the difference between this and the 5034Z? In the 5034Z, you need to see the 50 within 50 points of 0. With a 5014, basically all you do is look to see if the 14 is all the way down to minus 100. It doesn't matter where the 50 is. The 50 can be at 75 or 80 or wherever. The 5014 is the trend resuming after a little bit of a deeper pullback than on a 5034Z. Okay?
I see a number of those in currencies.
Yep. Yeah, I just want to point out one of them instead of a whole bunch. But yeah, it's a pretty good trigger. Some of them can be both triggers. Like here, the 14 was all the way down here and crossed back above. So did the 6, and the 50 was right at 0. So that was either a 5034Z or a 5014. It doesn't matter. You see what I'm saying? Here.
EMA is always 34.
Sorry?
EMA is always 34.
Yes. I do not use another EMA. You can, but I don't. Okay, so that's a 5014 long. $50.14 short. Here's MSO. Daily. Again, plenty of res. That's the thing. You want to see that res there. You're going to get in trouble with these more when you take them and price is just in outer space. You want to see that the pattern is maintaining. So we have the res. Price started to go down. 50 CCI was below 0. 14 up to plus 100, and then bam, down. Yes?
It says 50 CCI is above 0. Below.
Because I made a mistake.
Oh.
So time to do the work part of workbook. Cross out where it says above. Because you know what I did? I wrote the previous slide first, and I copied and pasted and forgot to change the word above to below.
Oh, let this one go.
2 demerits. And you get to call me Dave.
I prefer Rupert.
Okay, Rupert, yeah, well, that'll work. So yeah, that's a mistake. Thank you for catching it. Because I want to change that actually. So, yep, that's a 5014 short. And the last one is my favorite. The last one is my favorite. Doesn't mean I won't take the others. Remember, I'm looking for these to come together on different time frames. So probably on a short time frame, you're going to get a 5014, and on a higher time frame, you're looking for one of these. The 100-line bounce. Okay? The 100-line bounce, this is a 100-line bounce long. 100-line bounce long, the 50 CCI comes down to the plus 100 line as close as possible. Technically, it can be within 150. All right? Can be within 150 or lower. I like it better when it's closer. But if I had a higher time frame chart, a 60-minute chart, setting up a possible 100-line bounce at 125, and my shorter time frame chart, my 15-minute, was showing me a really nice 5014, I would take the 5014 long. Do you see what I'm saying? The shorter time frame should be triggering as the higher time frame is setting up with a trigger. The 100-line bounce, and I'll show you examples. The 100-line bounce is the 50 coming down as close as possible to the 100 line, Got nice stuff here on the fib. The 6th period crosses down below 0, doesn't have to get to minus 100, it just happens to on this chart, comes down below 0 and pops back above. That's the mechanical trigger, the 6 crossing back above 0. Why is this my favorite trigger? Because almost invariably, when you get a 100-line bounce, you are going to see a new swing high. All right, so it is an extremely reliable trigger. People are into Bollinger Bands or even Keltner channels. This is the same as bouncing off the outside of the band. All right, we used to call this in the Todd Mitchell, actually, it was the first time I heard this term, Keltner channel, running on the outside of the Keltner. He used to call it an upside running pattern. So if you picture the top of this 100 line as the outside of a Bollinger Band, what you're seeing here is price skirting the top, riding the top of the Bollinger Band. 100-line bounce almost always gives you a new swing high, and that's why I really like it, because it's a very reliable trigger. Okay? Yes, the 50 can break a little bit below the 100 line. You don't see that here. You might see it here. It can break a little bit below the 100 line, but if it breaks below the 100 line, what you need to have happen is it has to be back above plus 100 when the 6 crosses above 0. Write that down. I don't have that in the workbook for a reason, because I want you guys taking notes to make that stick. Yep. When the 50 is at the 100 line, it's great. If the 50 on a 100 line bounce happens to cut down below plus 100 a little bit, what you want is to see the 50 back above 100 as the 6 crosses above 0. Because I'll tell you, intra-bar, right now in a closed hindsight chart, this looks great. This looks like it held the 100 line. But intra-bar, that might have broken down below plus 100 a little bit. And it's in hindsight that it looks perfect. So you want to be prepared for that. My goal with these triggers, if you're going to use them, is that you don't have a moment where you're sitting there going, is that a valid trigger or not? So I'm just telling you what it might look like. It might break down below plus 100 a little bit, but if it's a real trigger, it's going to be back above plus 100 by the time the 6 crosses above 0.
So earlier in the chart, there's another one also.
Well, this one, yes, yeah, that is. Now, it gets you a new swing high. It doesn't promise that it's going to do that. That probably hit target. That was probably, if you go high to low, you probably have an extension right there. Okay, so yeah, all that tells you is it's going to get a nice jump start to keep going. How far it's going to go, basically all it says is that you're going to take out the prior swing high. Like here's where it came down to 100, it's going to take out the prior swing high. It doesn't say it's going to go that far or whatever, it's just going to make a new swing high. So it's nice because it's telling you, yes, the trend is continuing. This is basically a shallow pullback within a strong trend. Yes?
These two deviations you mentioned, the 150 and the on the 100, is it peculiar to any time frame?
No.
Doesn't matter.
No, and the standard deviation I was talking about is 1. If you wanted to reproduce this on a Bollinger Band, that's what I was talking about. If you wanted to look at what this looks like on a Bollinger Band, instead of using the CCI, you would set the Bollinger Band to a standard deviation of 1. You never have to think about standard deviations with a CCI.
So what I meant, you said sometimes,
Yeah.
although we're looking for the 50 to come down plus 100,
Yes.
sometimes it will hover around 150 and it's still okay.
It's still okay, but I would want to see another trigger on a different time frame. The whole point in my trading, and I will get to those examples, the whole point is I'm looking for different combinations of these triggers on different time frames. I want to see on my 60-minute Euro chart that it's setting up to do a 100-line bounce, and on the 15-minute, it's setting up to do a 50-14. Okay? In other words, when it triggers the 50-14, it's leading towards the 60-minute plus 100-line bounce. That's how I have a good win rate with it, because it's confirming to me that in the context of the 60-minute pattern, it was a shallow pullback, and on the 15-minute pattern, it was a deep pullback that's ending. Okay? So what I'm saying is, if it's setting up and triggering a 50-14 on a 15-minute chart, I would take it even if that CCI is at plus 150. I would prefer that it get as close as possible to 100 though. And I actually have a multiple time frame trade example coming up where I'll show you what I mean. And the last one here is just a, the reverse. This is a minus 100 line bounce. Okay? Nice resistance. 50 CCI is below minus 100, pops back up, holds the minus 100 line. 6 crosses down below 0 after popping above. Here are 2 cases. See, this one triggered. It didn't quite give you a new swing low. In a case like this, you'd want to have a stop. I mean, basically, we'll go into that, but you'd have to stop, as I mentioned yesterday, above the 786 here. So you wouldn't have gotten stopped out on it, but it took the second go around to the trigger for this to actually move and give you the new swing low. Will, I was just thinking, you said you only use the 50? So it's not really a problem for you in a case like this, because if the 50 is violating the 100 line, instead of needing that mechanical 6-period trigger, you just need the 50 back on the right side, you know. The 6 is only necessary. The 6 is only just for people who really want to go, this is the second that it's triggering with the 6 crossing back, you know. All right, so everyone see what I'm talking about here? Minus 100 line bounce. There are some that are a lot cleaner. This one, I wanted to show you one that just is not quite as clean because it took 2 triggers for it to actually move. But you see how it gave you a new swing low. Okay? Yes?
Sorry. This is where I'm at now. I've learned 3 stages. Let me see, that's where you're taking me. Firstly, we are trade traders.
Yes.
And we want to know if the market is going to follow the direction of the trend or it's going to reverse. And we'll be using our retracement expansion tools, our Gardner or prompts. Once we get a fix on the price chart,
Right.
our stage 2 is to check what our indicator or trigger is saying.
Yes.
CCI. So we have checked our CCI, but don't stop there. Now we go for another time frame to see if something is happening.
I like to do that because just like I told you when I went into my personal history thing, I first learned a solid trading system that involved 3 time frames and the idea that they come back into alignment. And I've learned since then that what you're looking for, whatever your execution time frame is, like a 15-minute is your execution, whatever your execution time frame is, you want that trend to be in agreement with the trend on the next higher time frame. Okay? So what some of these triggers do is they help us also to quantify trend. A 100-line bounce, or in this case a minus 100-line bounce, is a minor bounce in the context of this downtrend, and it's telling you it's going to get a deeper move, get you a new swing low. If you then look at a shorter time frame, and the shorter time frame is showing that it is giving you a trigger that represents more of a bounce, a 50-14. Remember I said that was a stronger bounce in relation to the trend? So if you're getting 2 of those triggers on 2 different time frames, it's a more reliable trade. It's telling you the higher time frame is resuming the trade, the shorter time frame is joining the higher time frame trade. Okay? And again, really, I have a couple of examples here, and that's what we're going to be doing tomorrow, because I'm going to be on the Forex. We're going to be running 60 and 15-minute charts, and I will show you how they work together. At the moment, I just want to make sure we're all on the same page about what the triggers look like. Yes?
As your example there, in 9/1/2009, about 10 o'clock in the morning, I guess that is, they all belong, about 3 of them. The 50, I guess 14, and the 6 drop below the 0.
Yeah, it's right here.
Is that a
That's that's a 50-34 short. Okay. Yeah, that's a 50-34 short, but I just didn't point that out on this chart because this chart is about the minus 100-line bounce.
Oh, okay.
Yeah, definitely. You are correct, sir. You are correct. That is certainly a 50-34 short. Yep, and let's see what we have here. I think I might have an example. Yeah, here's one of my older Forex things showing multiple time frame, the advantage of multiple time frame, okay? This one, again, this is back when I was trading faster time frames. Okay, I think this might have even been Asian market open around then. And I actually took screenshots live as I was doing the trading on it, because I took this trade. This was USD yen. And again, shorter time frames, please don't let that scare you. But this was 15-minute on the right and 3-minute on the left. It would be exactly the same if it were 60-minute and 15, okay? But this chart happens to be 15, and 3. Now look, we have a lot of support, right? A lot of support on the 3, a lot of support on the 15. I'm sorry, 3, 15. Actually, this was almost a Gartley, but not quite. But lots of nice support, pattern of higher highs and higher lows. Look, 3-minute chart, you got a possible 50-14. Do you see this? Price is down here, you know, CCI is down here at the 0 line. The 14 is down at minus 100. Now, if you go over to the 15-minute chart, you can see that we have a possible 100-line bounce. You see that? 50 is above 100, 6 is below 0. This is ideal. This is what I look for. The higher time frame might give us a long side trigger. So what I'm looking for is the shorter time frame to give me a long side trigger, which leads to the higher time frame long side trigger. Isn't this better than looking for a 3-minute long side trigger while that CCI is below minus 100? In other words, looking for a long side trigger while the higher time frame is in a downtrend. This is telling you the higher time frame may be ready to resume to long side. The shorter time frame may be ready to join the higher time frame in long side. Okay, and like I said, I annotated this later. I actually took this trade and just took a bunch of screenshots. If you are a counter trend trader, there is a possibility in the other direction. The possibility would be 50-34 short on the 3-minute with support breaking and a breakdown below plus 100 on the higher time frame. I don't like that trade too much. First of all, I would never take a short when the next higher time frame is above plus 100. What I'm assuming here is that it's going to break down below plus 100. It's still counter trend. I'd much prefer that this set up to long side, but the point, or trigger to long side. The point is, I like to say to people, and I like to visualize. Visualize what it would look like for that to actually trigger in the right direction. What would the trigger look like? What would this look like if it triggered a 50-14 long? Then all you have to do is wait for it to happen and push the button. Okay, do we need to break? Yeah, okay. Yeah, we're going to take a break and finish this trade because we've got to change the tape. This trade, at least it would be a good thing. Okay, so what I was saying was, what we're going to do is, thank you. What we're going to do is visualize what a completed trigger would look like. And again, I don't care if you're not using CCI, you should do that anyway. Go look at your, I mean, obviously if you're using a MACD, you know what the MACD is supposed to look like if it's triggered, right? You know what that looks like. So when you're looking at maybe it's going to trigger, maybe it's not going to trigger, visualize what it's going to look like if it actually triggers. And that way, when it matches your criteria, matches your image in your head, you just push the button. You know, is it triggered? Is it not triggered? Is it? Visualize. Okay? So we have a possible 50-14 long here. 50 CCI at 0, 14 below, or at or below minus 100. Possible 100-line bounce here. So all I have to visualize is if the 14 crosses above 0, it's a buy. Yes?
Question on the 100 bounce.
Yeah.
So can the 100 go below, the 50 CCI go below 100 and bounce again, or?
Yes.
Okay.
Yes. If it cuts down below below plus 100, the rule is that when the 6 crosses back above 0, the 50 has to be back above plus 100.
Okay. But, you know, once you get into that territory where you get the 0, 50, 34, 0.
Right.
And I don't know, when you're watching them on a real chart, you say, come on, you know, it's like that.
Yeah.
Because it plays with you.
That's what I'm saying. Use your energy instead. Use your energy instead to visualize what it would look like, triggered, and wait until the last third of the bar, and take it then. And that way, if it goes against you, well, it goes against you. You know. But if you wait,
at least you waited until you
yes.
get the proper trigger.
Yeah. Now again, one of the reasons why it's the last third of the, because some people will say I have to wait till the close. In other words, wait until this actually closes on the 3-minute chart as a triggered long. You can do that, but one of the advantages of using multiple time frames is that I'm a heck of a lot more comfortable taking this 3-minute 50-14 long if I have a higher time frame trigger setting up too. The probability of that working out, if you wait until the last third of the bar and you're triggered, You have the higher time frame trigger helping too. The probability is much greater that it's not going to reverse on you in that last third of the bar. Yes?
And your target on the higher time frame chart with that underlying bounce
Yeah.
would be a new high?
Yes, well, it would be the target. Hopefully you get to the target extension too, because you'd be breaking the 786. See, the reason I like 100-line bounces, if you get to a new swing high, as it implies, it means you're going to be breaking the intervening 786 resistance. So that's why you get to target the 1272. All right. So what we're looking for is simply for this to trigger as a 50-14 long. So what do I have on the next slide? Here. Triggered. Triggered. Again, these are live charts. Green dot. I'm not good enough with Photoshop to fake that. Now that it's triggered, nuance, watch the 50 CCI 100 line together with any remaining resistance on the chart, because the 100 line is that nuance we started talking about yesterday, that it also represents resistance. When you're below the 100 line, 50 CCI is below the 100 line, you need to clear the plus 100 line in order for the trade to continue. Look what happened back here. When it failed here, the 50 CCI tried to get back above plus 100 and failed and curled under. Okay? So that's what you want to look for as a possible danger sign. But in the meanwhile, it's triggered and you're long. You're long and you're considering the other stuff in the way as simply danger signs. And here, breaking the shorter term resistance will also coincide with 6-period CCI confirming 100-line bounce. High probability of new highs. That's why I'm psyched about this trade. That's why I took this trade. Because I had a short-term trigger and a setting up long side trigger that might add extra oomph to the trade. Think of it this way. That 100 line on the higher time frame is just another form of support. That's just another support level. So it had all kinds of things going for it. Home free. What do I mean by home free? We broke the 3-minute plus 100 line, broke the 786 resistance, confirmed the 100-line bounce on the higher time frame. So we now have a higher time frame trigger. Resistance broken, first target hit. Watch for any signs of failure. Trail with new symmetry. So if you have just a small account, which is fine, because small accounts turn into big accounts if you manage them right, you might be taking off the trade at that position, at that point, because that's your profit target. At the very least, you're going to let your symmetry trail up, and you're going to move your stop to under the closest level of symmetry. Okay? Because why do you put your stop on the other side of symmetry? Because the right place to put your stop is when, if that price is reached, it invalidates your reason for being in the trade, like we were saying yesterday. Symmetry break means the trend has been violated. So if you want to trail or you want to take off a partial position, that's up to your own money management requirements. If you're trading, one mini lot for $1, whatever, obviously you need to take the position off or be willing to give something back. All right? So that was just a walkthrough on one trade. I'm hoping that we have a bunch of things we can walk through tomorrow. As I was mentioning, I usually have a whole bunch more of these examples to go through at the workshops I've done, but to keep the costs down, this workshop was a little shorter than most. So we're going through as much as we can. That's why the information feels a little bit crowded into these couple of days. We will have a lot to cover tomorrow, and I wanted to bring you guys up to date on what's going on here. Trade management. I wrote this a while ago, and I've only made minor variations to it to incorporate other things I'm trading. So the reason is, no matter what you're trading, this says pips, because this was my initial game plan on my short-term Forex trading when I was using the 3 and 15-minute charts. So this was my little game plan. What do I mean by game plan? What is that? What does that piece of paper represent, or these photons on the screen?
Trading plan.
Thank you. That's trading plan. You want to know what has to go into the trading plan? What are my criteria for taking an entry? And how do I manage the trade, and where do I get out? People, I think, don't want to write trading plans a lot of the time because they think it has to be a document that's 20 pages long or 100 pages long. Your trading plan is not designed to explain to anyone else what you're doing. You don't have to identify every single thing you're doing and write it down like it's a computer program that you if, then, or else, blah, blah, blah. Then you're just going to get yourself tangled up. My point of this, and you guys can, if you want to learn from this, based upon everything I've been telling you about where the danger spots are and all that, that's great. But my point in sharing this too is to show you how simple a trading plan can be. I've seen very successful traders in action who have half that amount of information there. This is the trading plan that works for me. Like I said, there have only been minor variations based upon the thing I'm trading and the time frame I'm trading on. But this is it. Enter on multiple time frame triggers with a symmetry Fibonacci zone in support of the trade. Short-term entries with higher time frames in favor are okay too. In other words, if that 3-minute had been triggering a 50-14 and the 100 line was way in the past on the 15-minute, we were extended up there, that's okay too, but I'd rather see triggers actually setting up on more than one time frame. All right. Hopefully, if you have some opposing symmetry resistance in the case of a long, for example, it would be nice if it breaks on the entry because it's invalidating the idea of a downtrend forming instead. Okay? In other words, if you have an entry and a trigger and you have some symmetry resistance in the way, gets rid of the idea that, that breaking gets rid of the idea that you might be forming a pattern of lower lows and lower highs instead. It's not necessary that it break. Not necessary, but then you have to be aware of it as a danger spot, something that's in your way. Okay, watch for the other time frames to complete their triggers, fall into line. Be aware of the danger zones, 786s, 0 lines, 100 lines. In other words, once you're in the trade, like I said back in that example, okay, we were still waiting. Trade was triggered on the shorter time frame. We were still waiting to make sure that we could break our intervening resistance, our 100 line here, and for the 6 to cross back above 0 here. So you just watch those as danger zones. Watch for the idea that you might get hung up on the res. And if you're not experienced with this stuff and you see it stop at the res, just hit exit. It's no big deal. No big deal. If you took a timely entry, you get out quickly, at least it's not a loss, and you can document the trade and practice how to handle it another time later on. What I often do, having done this for a little bit longer as far as actually trading it, we come up and we hit the 786 and it hovers there for a bit. I'll tighten the stop real tight. I'll make sure I'm at least at break even or a little above break even. Just so if it falls, I'm covered. Maybe I made X number of pips or ticks depending on what we're trading. We do that a lot with the ES. 786 and 100 line is there. Don't want to have something that already made you 4 ticks turn into a loser on the short term. So just make sure you're at least at break even. Breaks out, fine. Gets you stopped out, there'll be another trade. So you just want to make sure that you're keeping an eye on those things. That's where be aware of the danger zones are. And just in your own trading plan, whether you agree with me or not, write down the things that would be a problem in the trade. Write down the exact spots where you might have a problem in the trade. Okay? Place your initial stop on the other side of the closest symmetry. 20 pips was something that I came up with based on my own money management. Was what was working for me. Ideally, you want your stop on the other side of the closest symmetry. Sometimes the symmetry is a little too far away, in which case you have to go back to using a money management stop, X% of your account, that kind of thing. Warning signs that your stop may be hit. Those danger areas holding on multiple time frames, higher time frames not triggering. Exactly what I was saying before. 786, 0 lines, 100 lines, and so on. You want to make sure that everything keeps breaking in the direction of your trade. Okay? So if you see those warning signs, you can bail, you can tighten your stop. You might end up bailing with a few ticks, so at least it turned, or pips, at least it turned into a winning trade for a few dollars for your trouble. Okay, once you've banked 20 pips profit, again, this was based on my short-term Forex trading, then 20 pips profit, exit at a break of longer-term 100 lines. That's a nuance, which I will show you. Or at a confluence of target overlaps. That's assuming that you have the time frames triggering in succession. 15-minute trigger, 100-line bounce, you're looking to see a new swing high there. You're going to look for the target on the 15-minute. That's what you're trying for as you trail your stop. Okay? What I'm trying to point out here is you're not just waiting. What do I do now? I'm in the trade. You can take a proactive role in your management. Have some kind of profit goal. So you can take something, as long as you're trading enough where you can scale in and out, have some kind of target where you can take some money out and put it in your pocket. That's what works for me. I like to scale out that way because I like to feel that I'm guaranteed that I have some profit and that the rest of it is the rest of it's a break even. Some people don't like to do that. Some people just want to go to break even and give it more time and distance to move. That depends on what works for you. If you go, I don't like to take partial profit, fine. Read your Van Thorpe and make sure that Van Thorpe agrees with you as to how you're handling your money management. If you want to stay in the trade, his work will help you determine exactly how much leeway to give that and still remain safe. My way of doing it works better for me psychologically. If more of the trades I can get into, I can make a profit from, so I take something off at a certain level. Again, the 20 pips represented very short-term trade. So that's what you're doing with that. Once you bank, blah, 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 yeah, I'll go into that. If the initial, yeah, this is important. Let's say you decide that you like the 20 pip idea on a short-term trade. You like the 20 pip idea. You look at your extension target at 1272, and that's so close that you're taking the entry right up against the target. Make sure you have enough room to get your initial target as you're hitting that button to enter. Make sure there's enough room there because you don't want to have a situation where you have a 20 pip stop and there's only 10 pip room to make it to the target. If this sounds complicated, it becomes second nature very quickly. You got the green line there. Is my entry price more than 20 pips away from the green line, or am I entering right up against the extension? Okay? That's the trading plan. My point is, you cannot copy everything on my trading plan, but you have to write one for yourself. Some of you have already. Some of you know it's a work in progress. Some of you are like, trading plan, I have to work at this? So, you know.
It's work.
Yes.
It's a job.
It is a job. It's a business. It is a business, and you are we're going to wait on the timing a little bit. It is a business, and you need to treat it like a business if you want to succeed at it. We're going to go and look at some triggers on on our live charts and play with them, look at some stuff in a bit. Let's take a little break so this can digest. I see some faces that are looking like they're fading rapidly. One of my goals tomorrow is to show you how this stuff is working all together. All right, so some of what we've had to do over the last day and a half is to cover the foundations and the basics, so that when I point to something on a chart tomorrow and say, we're looking at this and this, that's all we're focusing on right now, we needed to speak the same language. All right, so if you have a little time tonight, for example, take that workbook and take a look at those 4 triggers. So if I tell you I'm looking for this 100-line bounce, you know what I'm talking about. I don't first have to explain what a 100-line bounce is. Now, because the focus and emphasis has been on getting us all to speak the same language, there's been a lot thrown at you at once. Or not really at once. It's been spread out and there's been a good sandwich involved. Okay, so, you know, that does help. But, you know, this last go-around about the triggers, so you guys kind of, it's too much, it's whatever. Yeah, well, that's okay. That's all right. I'm actually using you as a barometer for the whole room because you're right in front of me.
Represent all of it.
You're the moving average of the room. The MACD, yeah. That'll do. Yeah, but again, the idea is to get a foundation in these things. Tomorrow, if we're looking at a potential trade, we're not going to look at everything that I talked about in the last 2 days all at the same time. We're going to look at specifically what applies to that market at that time. Okay? One of the reasons why I was recommending, you know, and Linda sent out emails saying, watch the videos on Mark's site when you guys signed up, is because that would give you a heads up also to the idea that I'm looking for the multiple time frames. I think that's when you got thrown a little bit, when I was talking about more than one time frame to look at. All right? You need to have more than one time frame anyway, because we want to know if the higher time frame has resistance and the shorter time frame has support. Okay?
I understand that. It's just that
resistance?
We want to know if we're trading into resistance. Like you might have a wonderful daily long coming up, but what if there's a major resistance level that shows up better on the weekly chart because the data is so far back that it's easier to run that work on the weekly. Do you know what I'm saying? You want to know if you're running into a weekly 786 resistance level $1 away from your entry off the daily long. Okay? So, and you were saying back there, I'm sorry, you understand that, but you said?
I'm just wondering if I can do all those things to make a trading time before the trade disappears.
Yes, yeah, you can. You can. You definitely can. That's one reason why I'm using only one indicator. The CCI is one indicator. So I'm using those 4 entries, the CCI. You look at 2 charts, so you're just looking for one of those 4 entries to be setting up on 2 charts. It's much easier than it sounds. Yes?
You mentioned in this plan, 20% profit to start. That's only off your short-term
Yes.
Forex charts.
Yes.
If it were like, say, ES, you'd say, your 8.
Right. Yeah, like I said, 8 ticks is what I use, yeah, actually. Yeah, you can add, yes, exactly. But yeah, as I mentioned, this is something I wrote a long time ago. And my point in using the one from a long time ago is to tell you that all I had to change over the years is exact details like 20 pips, depending on what I'm trading. My actual trading plan aspects, where to enter, where the danger zones are, have not changed. But yes, those trade management things definitely have.
You go over your chart setups, like what kind of volume, what kind of takes?
Tomorrow. That'll be easier because we're going to have the second projector running. Okay, and I know what the reason behind that is there are some people here who are only interested in Forex, and there are some people who are definitely not interested in Forex. And I've done a couple of these workshops where we used to go, hey, wait, there's something setting up on the Forex. Let's flip to that. And then we missed the thing on the ES, or whatever. So we're going to have 2 projectors, 2 projectors and 2 screens, and I'll be able to show. I can't show everything that I'm running because that would take up. My monitor, I have 6 of those monitors just for my charting, so that would probably, with projectors, cover about this much of the room. But I can cover whatever, if I trade ES, I'll show you the time frames I'm using for that. Yes?
The CME said that they reported their ticks in a different way.
Yes, I've changed. I only use 1 tick chart, and I've multiplied the amount on the other charts.
2.5, I think.
2.5 to 3. Yeah, it depends on the exact. Just because Carter said 2.5. What?
Going to see that also?
Yeah. I was using a 377 tick chart for an extremely rapid entry. By my standards, it's rapid. So I've just multiplied that. I tried 2.5. Whatever. I forgot exactly where it's set now. But most of my charts are volume charts, and those were not affected.
I was in my room the other thing. I want to multiply my balance of my bank account.
Yeah. Okay, so yeah, we'll go into that stuff tomorrow. What I'd like to do is, remember I asked you guys for some charts, chart symbols. Why don't we take a couple of those and run them up from scratch with the fib and take a look at what kind of triggers there have been on those charts. So at least we can see what this looked like. The market's not open today. We can see what that looked like in the past. Obviously, you guys gave me like 40 symbols, so we're not doing all of them. Some of them I had set up already, actually. But yeah, we're going to go back over some longer term stuff, primarily some daily and weekly. And let's just see what it would be like, where there might have been a good setup, how the fib would have looked there, what the triggers were like, and then we'll bring it into the future. We'll bring it to the current time to see what that, what that looks like there too. Oh, I did get, along with the list of securities yesterday that people wrote down for me, I got a written question as well, so I wanted to address that. Wrote down basically whether I think that maybe on Forex, the 618 level is more important than the 786. In other words, perhaps my idea that the 786 is the crucial level only really applies on non-Forex stuff, and Forex really is about the 618. No, I don't think that. Okay, both of them are important. If the trend is going to continue, very, very likely spot for it to hold is 618. Whether it's Forex or anything else, I am not downgrading the importance of the 618. 618 is an excellent level to see a hold if the trend's going to continue. 786 is the level that, if violated, means it's heading to the other target. Okay? That's the difference. I was not saying that I don't think the 618 is important. What's more important is where you're getting a cluster of those things. Where are you getting a 618 and maybe symmetry, or is the symmetry overlapping a 786 instead? But I'm certainly not saying the 618 is not important. It's as important, though, on the NASDAQ as it is on cable. Just as important. Trend, it's a very powerful place for a trend to hold. The importance of the 786, though, is that's the one you want to see break if you're heading for the target on the other side of it. And if you are heading for the target in the direction of the trend, you want to see it hold. Okay? So the 786 is the deciding point as to whether or not the trend is holding or reversing. 618 is still a more powerful place. The reason I'm repeating this, paraphrasing it, is because I want to make sure I'm differentiating clearly. I'm saying they're both important, they just serve slightly different purposes. All right, so let me see what we have here on some of these charts. I wrote down, or I circled the ones that I actually did load. Okay, I thought I had some more here. And I still have this nice pile in case we run out. Let's see what we have. All right, we're already set on our S&P for tomorrow morning. Example on our, we know that we've gone over a lot of S&P examples. You've seen the Gartley's hold in the past. What kind of trigger do we have off this Gartley support on the daily? 5034. Exactly. That's a 5034 into Gartley support. Okay? Into the Gartley support, 5034 there. Now, if we go, you want to see a multiple time frame example. Let's take a look at the same security on the weekly. Okay? Well, there's the Gartley. Okay? So what happened here? Also a 5034.
Yeah.
Okay? So that was a multiple time frame trigger.
Now, do they have to be the same kind of triggers, or can they be different?
No, they're usually different. This is unusual that they're the same. They're usually different triggers. The point is, that's why we have it narrowed down also to 4 triggers, because we're looking for example, on a higher time frame, you might be getting a shallow pullback. Then you might get a 100-line bounce. Shorter time frame, in that perspective, it looks like a deeper pullback. So it's setting up a 50-14. That's a very common combination. 50-14 shorter term, 100-line bounce longer term. But like I said before, you wouldn't take I wouldn't take, let's go back. Here's our S&P. Okay? If we were all the way back here, let's assume for a second that this was about to trigger a 5034 back here. Okay? And at that point in time, the next time frame, this is the point of looking at the higher time frames. Let's say at that point in time, it wasn't quite the case. Let's say at that point in time, you were just approaching the underside of the weekly minus 100 line. Then you're saying that you're taking a long side trigger right into higher time frame resistance. Yes?
Sorry, completely different question. Are we going to do the timing?
We're going to do that tomorrow.
Tomorrow?
Because if I throw timing at you guys right now, we're all going to turn into a bowl of jelly. Okay? So we're going to do the timing tomorrow. We're not going to be, we're not going to be tracking markets tomorrow live as though we're trading everything live. We're not going to be watching everything with that kind of intensity. So we're going to take breaks from looking at the markets. That's why we're having a long day tomorrow. We're going to cover the timing then. The advantage also is that as I'm discussing the timing, I'll be able to show you how to do it on the live charts as they're running. It's just not enough time today, not with the degree of clarification we've had to go through on stuff. All right, so there's an example in the past of the time frames working together with the fib support and so on. Okay, this guy. And so I'm going to get rid of this stuff off the chart because we're more concerned about the present, I would think. Okay? Now, let me see one of these examples. Okay, we'll save ES because that's essentially the same thing. Ford. Leonard had asked about Ford. Ford Motor. Okay, so I think I have that loaded here. Yep. Here is a daily on Ford. Okay, let me get this out of the way. Daily chart on Ford, no fib here yet. All right, nothing to distract us. Remember, same work, even if you're doing a 15-minute Forex chart, it's the same thing. So, not showing anything that's specific to a stock. Earlier on, we had long side triggers. We could set up the support for back there. Let's see how that was holding, actually. Just a little quickie here. I'm just going back to where there was a trigger to see if there was something to justify taking it. And that, I clicked in the wrong place.
When you're going to the lowest level,
Yep.
and you're taking high to low.
I'm taking high to low and projecting from the next high. Yeah, I'll walk through it. There we go, that's good. This is the one that would be bold, though, because it's the one that's unbroken. See? This one was a deeper pullback than the one before it. But like I said yesterday, sometimes the trend strengthens and respects an earlier pullback. So this one is here, but it's not bold. This one is bold, meaning that I'd still consider this a potential uptrend as long as this one held. All right, so I'm just doing this real quick to show us if there was something at earlier long side triggers to justify by something I'm saying, fib-wise. So back in time at this high, we had all this nice fib support, okay? And what do we have here when it pulled back to that support? What's this?
It's 100 rejection.
Yeah, plus 100 line bounce. Okay, plus one, it came right down to 100, 6 was down below 0, popped back above 0, and that's what we got afterwards, okay? So now we know that that had justifiable support there too. If I had no support, that was in a downtrend, for example, I would just ignore the trigger. I'm looking for the support first, and then the trigger. So let's update this to today, so we can see if there's something, what's going on at the moment. And again, this might have been broken, we'll see. High to low, expansion tool, high to low from new high. Okay, well, let's see. That did not close below it. All right, so that's holding. Symmetry right here. Of course, if we want to get some deeper symmetry to see what might, if that were to break, we could take the swing into the low from here, because now it's been violated, it's been exceeded by this high. So we can use this larger swing into the low and project. All right. Hopefully, if you want to be long, you won't even have to worry about that level. In other words, we're not going to see that level. Current symmetry is holding. Now we're going to take our retracement tool, low to high. Okay, 236 was violated. And let's go to a more recent low to high. And that's not bad at all, because we have symmetry and a 618 holding. Okay, so what this means is I really would not want to take shorts. You had on this time frame a 50-34 short. I'm not going to take that right into support. Okay, let's look at what the weekly chart on this looks like. We might have had another reason not to take a short. Some of these I open the daily and the weekly, some just the daily. Okay, so here we go. When that short side trigger came up, okay, I'm dealing with limited screen space here, so come here. Yeah, we were just challenging the plus 100 line, so that would be a very tricky spot to take a short. See on the weekly? Because that could have turned around and given you a plus 100 line bounce. So that plus symmetry being maintained on the daily tells me I'm not shorting this.
On the daily, you have a 50-34 right at the end.
Yes.
Curls back and goes to 0. Yeah?
Well, this may give us, see, here's where the decision process comes in.
That'd be like a setup for a 50-34Z.
Exactly,
Okay.
exactly. So what you would have to do, let's assume, a couple of ways to look at this. And by the way, now I'm taking high to low with the retracement tool to see what's in the way, on the way up, and targets. Bless you.
This hotel.
Yeah, it is, because it seems something. A lot of people are sneezing. I got the itches, I don't know what that deal is about. We want to know what's going on up here. This has not reached 618, so we're not looking for a Gartley possibility. Okay. Let's assume for a second that you took the 50-34 long here. Okay? What we can do in a case like that is take our expansion tool and go high to low, the swing before this new swing high, see, because we've taken out that high, and project the support from there. Okay, and then we can also take our retracement tool and go low to high. And what you'd have to do in a case like this, if you wanted to have a stop in the ideal place, you could put your stop right below that $6.90. Okay, because if that's violated, you're breaking symmetry. There's no rhythm left to the uptrend here. You're breaking the 786. That means we're going to get down below the prior swing low. All right, and that, as a 5034Z, is going to fail. It's not going to happen. It's going to trigger short again.
I can tell you it's not going there.
Well, you know what? Teach us your method, please. Okay.
I can tell you it's not going. It's not going lower.
Okay. Well, that's great. That's good because we might get a 5034Z long in a case like that. If you had not, if you were waiting for the safer additional entry, you're waiting for a safer additional entry, you'd be waiting to see if this is going to bounce with the 6 back above 0 for a 5034Z, as someone back there mentioned. Okay, so that's what we're doing. Then on the way up, you'd want to watch to make sure that the plus 100 line broke, that the 786 broke, and once that broke, you'd be on your way to target. At initial target $9.47. On the way up, the symmetry actually will automatically trail upward, and you just trail your stop. Okay?
What do you do intraday on those stops? Just closing?
You can. You mean as far as a stop?
Stop below 690.
Yeah. If you're going to place it below, yeah. I would want it during the day. Yeah. Well, I'd want a little bit more of a violation during the day. You know, if you're going to do. The other thing is, you know, if you have the time and you're actually watching them intraday, you could use a 60-minute chart if you're really into. You know, just have it running in the background and set an alarm.
Would there be a possible ground setup on that?
Sorry?
Would there be a possible ground setup on that? That last swing to the low? Up to about 127.
Yeah, there is a possibility, but you know what? This isn't really much of a decline. Into, you know, yeah, it's well, you mean a crown for longs?
Yes.
Yeah. Well, I'd rather see that at the bottom of more of a decline instead of but it's possible. Could be that way. So you know what? Just in case, let's bold the 618 also. Okay. It's a possibility. Bless you. Wow, what is going on here? It's like sneeze fest. Okay, so that's what's going on with that chart. And I'll tell you one other thing you have to look for as far as a danger zone here is you'll notice that if you look at the weekly, I don't like this. I don't like this because the weekly has the 6 period back above 0, but the 50 didn't get back above plus 100. By the way, you can turn on, I guess I probably had it off for the daily and weekly charts, but if you go to your indicators, 50 CCI, you can say show values. We have that turned on in the chat room on the intraday charts. And you see, that's going to give you the last read here. This is at 94. And I think there's a very high probability in a case like this that plus 100 line on the weekly is going to serve as resistance. Okay? I don't mean that's going to make it plummet necessarily, but it's in the way of the long. It might make it rocky. It might make it choppy. So all the more reason why if you did have a long here, you'd want to have a tight stop. If the 5034Z occurred, it might get that back above plus 100 on the weekly. But I don't like how the 6 is back above 0. And because we've seen that happen so many times. 50 comes up here and then just curls and rejects. Again, picture something stuck on the underside of a Bollinger Band. You know.
You like that 50 break
as the 6 crosses, yeah. And then, you know, we already have the 6 climbing above plus 100. It's going to get extended, and the whole thing is. I don't like this setup. I mean, I'm not taking a long here. It looks like if this is going to stay choppy, it's not done yet. Okay, so that's my read on that one. I don't think there's anything wrong if someone wants to be more aggressive in taking a long, but. Not wild about it. Not wild about it. Again, tight stop would be called for. All right, so are we all clear on what I'm talking about here? And I can tell there's some Forex people who are not paying attention because it's not about Forex. Work is the same. CCI readings are the same on it. Let's see what else we have here. Let's do a Forex something. Ooh, all of a sudden the energy in the room changed. Euro JPY, yeah, I have that one set up. We track that every day. I just don't have it in the real-time charts. Dun, 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 dun.
I can tell you, your charts are working already. I don't know, what
Yeah.
time on Sunday do they start working?
When the market's open.
It started
It's
already.
not open
Yeah.
yet, but your charts are working.
It is, what time is it? Isn't it 5 o'clock?
New Zealand, Australia?
Yeah, it's open. It's open.
Yeah, Australia, New
New
Zealand.
Zealand, Australia is working, USD.
Yeah. It's that time of day on a Sunday. Okay, so what are we looking at? Euro JPY. Someone had asked for. And let's take a look at what the daily's doing there.
Australian dollar, US dollar is working.
Okay, so here we had a case where I remember running this chart for, and sending it out to clients too. We were coming down into this support, and I'd said we were going to be looking for this 1272 target, this is the daily, if we broke this 786. Remember, daily chart, I want to see it breaking a close. So that didn't happen. It bounced there instead. So now this is actually looking a little bit indecisive. On the longer term, on the daily, it's in an uptrend. We have symmetry support holding. We have long side triggers on the daily. This one I happen to have it set up so the 50 is separate from the 14 and 6. It's just because I set up the charts at different points in time. I set this one up a long time ago, and I hadn't yet decided to change it to having them all together. Another example of how it does not matter how you have where you have the indicators. It's a matter of what calls to your eye. In this case, they're separate. And this one, remember, is actually 50, 20, and 6 because it's a daily chart. Just to see that the weekly is in agreement with that, I just pop up there on the weekly. And I think, yeah, you see the weekly CCI is actually gave us a 50-20, not a 50-14, it's 20. 50-20 long is what we're working off against there. So if you were taking shorts there earlier on the longer term, you were working counter trend because it hadn't triggered short on the weekly yet. Okay, the support that held, the 786 is showing up strong enough to show up on the weekly chart. All right, let's go back to the daily, and then I of course have a 60-minute. That's the euro, your USD. So here we know on the upside, see this is good. I like this. Check this out.
Is that a crown?
Where?
Just to the right of the white arrow.
Of the, oh here.
Yeah.
I don't know. Where would you draw the, you mean like here to here and up?
A little bit to the right.
This one?
That up,
Yeah.
down, I guess it's
20.
not 1.2.
No, this wouldn't be. It's a little bit weak of it. I think that, let me see, it might be. It might be. I'd kind of like to see that swing high over this one, but it doesn't really matter.
I think it went back up to 618.
I don't think so either. I'm not sure. Yeah, we could check, but it's iffy. Also, I can just by eyeballing it, you can see that isn't 1272.
Okay.
Yeah, but what I like here is on the daily, our 50 CCI is above plus 100. All right, if this pulls back and the 50 can stay above plus 100, it gives you a very strong indication that we're going to break the 786 res. Okay. You remember what I was showing you yesterday about the 100 lines? You don't want to see the 50 holding below plus 100 as you're hitting that 786 because it's a warning that it may just fail, may just collapse at that point. In this case, if we can get pullbacks, maybe maintain intraday support, get pullbacks and maintain above plus 100, you're going to lose that level. You're going to lose the 786, and then the target is actually a lot more than that 1272. That 1272 is high to low like that. The target would be these overlaps up here, okay, from different swings. The reason this chart is all done already is because we work with it every day. This is the same chart, that I send out on that. This might pull back and give you a 100-line bounce on the daily. Let's see what the 60-minute looks like. Okay, here's the current 60-minute. Pull back, holding support at the moment. See if I can rescale this a little bit. Dang projector. Okay. Here, what we'd be looking for like now, for this to continue, you're holding support, there's really no reason to bail on this. I like to use some, if I'm really trying to trail tightly, a break down below plus 100 on the 50 CCI is a good exit. But then we'd be looking for a re-entry. Depends. If you're trading off the daily time frame, you have no reason to exit. On the 60-minute time frame, you have a reason to exit. Breaking down below plus 100 is calling the shorter time frame momentum into question. So then you'd be looking for a re-entry. Is this going to trigger a 50-14 long? See? 50 CCI is above 0. 14 might pop above 0. So then we can go and add our high to low with a retracement tool, see what remains in the way. If that triggers long, we would want to watch for a break of the 786, watch for a break of the plus 100 line, okay? By the time it was testing, watch this, by the time it was testing the 786, this high would be above this high. So we'd be able to go with the expansion tool, high to low, from the new high, put your stop on the other side of it. Pretty tight, nice and tight for a 60-minute chart. So if it does get hung up at the 786 and the 100 line, you have a tight stop. If that breaks, it invalidates the concept of the uptrend, you're out of the trade. Okay? Let me find one that we don't have all prepared this way so we can start another one from scratch. FAST, a stock. Someone had asked for that. And obviously that would not be set up in the Forex program. Okay, so here's a daily. Let's do some fib work. Never before touched by a human or Mark's hands, or Dave's or Andre's or... Yeah, well, you can see right here, by the way, in the past, that this was a big Gartley. Okay? I think so. I think that came up. Actually, I'm not sure that came up to 618. No, that cut short of it. So that was not a Gartley pattern. I was just looking at what had happened in the past. Excuse me. This one is, though. This little guy. Yeah, see up to 618? Sorry?
Nice Gartley there.
Yes, nice Gartley there. All right, and again, this is hindsight stuff, but I figured you could see how this coincides with the triggers. Okay? Nice Gartley. Where is my expansion tool? Okay, so there we have a Gartley. Here was the intervening resistance that would have to break to invalidate the idea that it was forming a downtrend instead. You can see it broke. Okay. See it broke. Now where was our target? High to low with the retracement tool. Oh, look at that. Went right up to 1618. First a little temporary hold at 1272. Some people might have exited the trade there. Others, took something off and trailed with new sim. But you had a trigger. Coming off that Gartley support, there's a 50-14. Okay, 50-14 long. Well, I think I opened a weekly chart on this too.
Yes.
Yeah, you saw it on the list. Yeah.
What's that stock? FAST.
I forgot.
That's enough.
Okay, thank you.
Which one?
That's enough.
Yeah, okay.
Winona, Minnesota.
So yeah, here, actually we're working off a 50-34Z here. 50-34 long, 50-34Z long. Let's see how that works together with the Gartley. All right, again, I have to rescale these charts. See that? The Gartley, you would not have been trying to take a short there on the daily because you were right here testing for the possibility of a 50-34Z confirming long side trigger on the weekly. That's what I mean about the time frames working together. Otherwise, you might have looked at this chart on the daily and gone, you know what, it's taking out the prior swing low, it's time to short this, all I need is a short side trigger, and I'm all ready to short and I'm all ready to short. Well, we see it as Gartley support, and the higher time frame is setting up for a long side trigger. So no on short, wait for a long side trigger. If you have the time, take it down to a 60-minute chart, 30-minute chart, something intraday, watch for the trigger there, You might get in sooner, you will get in sooner, watch for the trigger there, and then keep your eye on the daily for it to follow through with the long side trigger on the daily. You're in earlier, you manage the risk more tightly. That's how this works. Depends on how much time. The reason I'm saying that is I know, the questionnaires you guys filled out before we got together here, some people said they're end-of-day traders only, which is fine, but then you have to manage the trade based upon what happens on the daily. Okay? So what else do we have here? Thought I opened some other ones too. Yeah. Okay, we looked at the weekly SPX, S&P cash, weekly and daily. ES, basically someone wrote ES. So ES time frame, I'm not sure because, we've looked at the S&P, it's the same thing. We could look at ES daily, but it's going to look exactly the same. The intraday ES we'll be looking at tomorrow. Let me see what else I opened here, because I think my notes, what happened was while I was outside, someone was messing with my stuff to look at this book. So my notes got a lot of order. Yeah. Okay, so let's see what's on here. That's Euro futures. For gold, someone said gold. All right, well, gold. Here's a gold chart. All right, gold, let me get the daily and weekly up. Gold's really interesting because those of you who are, members of my service, you know that gold spent a lot of time in consolidation. This is the weekly, here's the daily. And what was I saying during that consolidation phase? Look for a break to upside. It's probably going to break to upside. Every day I was writing, because I wanted to make sure people weren't trying to take a short on that, it's probably going to break to upside, probably going to break to upside. What was saying that to me? Not so much this little Gartley, but the fact that prior res breaks from larger swings had already broken longer term 786 resistance. If we go down to if we go over to the weekly, you take this big swing on the weekly, high to low. Look at what happened here. This last push broke the 786, and then we had a pullback. And during this time, I was thinking, in other words, during the time after this pullback, I was saying to myself, I said, self, it broke the 786. Also, by the way, I don't remember if you guys caught this when I mailed it out in the chat room, folks, but remember occasionally I would throw the monthly in there? I was throwing the monthly gold chart to show that the monthly was triggering a plus 100 line bounce during this phase. So the monthly CCI was showing a plus 100 line bounce. The break of the prior 786 from the larger swing had me focusing on upside. We were heading for this target. So I didn't want to think about shorts in there. So it was chopping and chopping and chopping. And we got this Gartley pattern. It even shows up on the weekly. Okay, we got a Gartley pattern and one spike, and then here, this is the Gartley pattern I showed you earlier that was ABCD correction, reinforced by the low to high. So we had a Gartley, and this is where it started to take off, consolidated in here, another Gartley for the next leg. Okay? So where are we now? We have exceeded a heck of a lot of targets. See that, even this swing? Okay, it exceeded there. And then we had another little one in here that shows up actually better on the intraday. Okay? So it's extended, but we still have the outstanding upside target here at 1126 on this, on this weekly time frame. So what I'm focusing on is the idea that on pullbacks, we're going to be looking for long side triggers. Okay? Let me get rid of this stuff because we don't need it anymore. Okay, so that's the deal. So what we'll do now is we will build our support, because who knows, it might even do something for us tomorrow. Expansion tool, high to low, from high, high to low, from high, high to low, from high. We're getting a lot of powerful clustering together of all this symmetry alone, even right in here. Okay, and Most of my clients who are in the chat room don't bother reading my daily report, and then I have to roll my eyes during the day. Because if you did, you'll remember I was saying to focus on this area, the 1029 to 1039. It's a pretty spread out support area, but it's very powerful. So, you know, we'll probably line up for additional long side triggers somewhere in that realm. Okay? We also have, see how the 236 didn't hold and it's really standing on its own? It's you know, it's not the best level. It's the fact that, there was one thing we were talking about too, the fact that the only level on its own up there is that 236 alone, told you when price was up here, told you that's kind of extended. This needs to pull back if we're just looking at a 236 standing there on its own. So now though, we know if there's a great deal of interest in driving this higher, we have a 382 with symmetry overlapping, and then we have all this other stuff in this area, and we're also above the plus 100 line. So we might get another plus 100 line bounce for additional push to target. All right, we'll do the timing tomorrow, but I can tell you there were also a few timing factors close to that high. One thing I like to look at when there is timing is divergence possibility, indicator versus price. So the CCIs were making lower highs and price was making higher highs. Told you the brakes had to be put on, but it doesn't mean it has to pull back. You know, it doesn't mean it's a reversal. If you're short on gold now, it's way counter trend. And what you need to do, I almost said is have your head examined. No. What you need to do is be very, very careful with that trade because you're trading directly into support on every time frame. Okay? And here's the weekly. I mean, we have the same kind of support setting up on weekly. The weekly CCI, I don't have this value thing on here, but it is kind of extended. So you had a weekly plus 100 line bounce also on this last push, bringing a new swing high. Okay, that's what we're looking for. The fact that the weekly is a little extended means, you know, it could have a little bit more pullback in store. But we're focusing on the weekly target because we broke way back here. We broke that 786 on the way up. I'm sorry, way here. That broke the 786 before it started to pull back. Another reason why you don't want to try to do a trading plan where you take the 786 break and ride it to the target because it can pull back afterwards. Okay. I'm getting a 5-minute warning on the film. All right, let me see what else I have. Yeah, my notes are like totally missing.
Mark, can you do a real cheap spot? DYM?
Yeah, actually, I see that written here, and I don't think. Let's see how nicely this loads data for me, because I think it reconnected now. Daily history thing didn't reconnect. Let's try it though. We'll see. Yeah, I like. Well, I think we still have MSO, which is pretty cheap too, but we'll try DYN. That's F5 if we want to get a quickie on it. Where's my F5, please? Oh, hey Mark, learn to count. DYN. Okay, let's give it a minute and see if it actually loads the data. This is why I was trying to get things loaded last night, you know, so it wouldn't take our time just sitting here looking at a blank chart.
Does e-signal load over the weekend?
Yes. Yeah, it definitely does. I'll tell it to get data. We might have a data problem. What happened was now twice already today, someone tripped on my power cord and disconnected it, and the computer went into standby and doesn't want to reconnect to the network. So, yeah, so I'm not sure we're really connected now. We'll have to see. I don't think so. I think that might have to wait until tomorrow because the other alternative would be to reboot everything, you know, to get that to work. So, yeah, we're stuck with what I have loaded at the moment. And tomorrow, someone is going to have to volunteer to actually sit on the power cord. Okay. And thank you, yeah. And all right, so let's see what else I do have. Okay. Open the chart thingy. Here we go. Home Depot. Yeah. Mm-hmm. So I should have that open actually. HD. Okay, so here's Home Depot. Okay, and let's see. We could go back in time and see all kinds of cute things here. Here's a Gartley potential one that didn't actually make it down to the support. Let's just do the current stuff. See where we are with it. We can take our expansion tool, and again, you know, what I'm doing with you guys now, hopefully will be helpful, is I'm repeating the process. high to low from new high. Now you can see we have, this one looks like it broke. Okay, so actually closed right on it, so that's holding. This one broke, high to low from high. So it's saying the trend is a little bit weaker than it had been in the recent past. That's no big deal because probably if we take our retracement tool, let's see what happened here. Low to high. Okay, we didn't quite make that downside extension. Just seeing what other support we might have. Seeing what kind of case we have for support. We definitely have a long side trigger in play here. All right, that's good. The 786 from that low came in right at the support. Do we have to break for that?
Yeah, I'm probably going to break. Or at least change the tape.